The information technology sector has smashed through to new all-time highs, and that's a loud signal this bull run still has plenty of fuel left. But here's where it gets exciting. Some of the biggest opportunities haven't moved yet. Right now, there are ASX AI stocks still sitting quietly in the shadows, but not for long. These are the ones getting ready to explode as the next big tech wave hits. So tonight, we're diving into 10 stocks you need to see before they take off. If you want to trade with more certainty than over 95% of traders, then you've come to the right place. Welcome to Wealth Within's Australian Stock Market Show. With over 2 decades of experience training over 30,000 clients, we bring you what actually works in the stock market. I'm Dale Gillam, and joining me tonight is Wealth Within professional trader Philip Tortevsky. Good afternoon, evening, Phil.
Good afternoon, evening.
I don't know what time it is.
Look, it's stock time.
I'm on holidays most of the time. I'm living the dream.
You are.
And we're without Janine, which means we can talk about uranium and anything we like without her interrupting us.
Yes, no punches flying through.
No pink boxing gloves.
Pre or post show. But look, it's exciting. You know, the stock market is flying in this particular sector. IT is at new all-time highs. It's come off a big correction. There's been all this talk, you know, that it was slumping in 25, big 24, but now it's back. And I mean, some of these stocks that you're going to see tonight, yeah.
Look, I had a look through your list and I went, wow, very exciting list. Anyway, now we're going to be joined by Pedro later on in the show because he has an awesome trending topic and a hot stock tip you actually don't want to miss. Now, the technology sector has had a stellar recovery in May and June this year, taking the index to new all-time highs, cementing that there is serious fuel behind this boom. So let's start things off by taking a look at some of Australia's purest AI innovators first, and later on in the show, we'll dive into some amazing AI infrastructure and robotics opportunities. Now, I know you've got a great list there, Phil.
Yes, let's dive straight into it. So on your screen right now is the first one. Now, Dale, you've spoken about this stock extensively in history, Appen. I mean, you know, I
was talking about it before it took off.
Yeah.
I wonder if anybody listened.
No, well, I mean, you know, maybe this time.
Well, it was like 360 too. I talked about that before it took off the first time a few years ago, and people are going, well, you're crazy. But hey, look at it.
Yeah, it's time to have a look again at Appen right now because, I mean, look, it's one of these stocks. Obviously, the first 5 we're going to look at more in the, I guess, AI software-ish type innovation, real innovators in the space, as opposed to the second 5, which are more infrastructure-based AI players. But look, nevertheless, got to look at everything, right? And Appen right now is in an interesting spot. It's one of these stocks that had that really huge expansive type move. I mean, just as equal in terms of the pullback, right? And right now it's coming into a period at all-time lows. These price levels here, they're attractive. If you're looking...
I think this is the safe time for this one.
Yeah, and that's the exact point. At the big end of town, looking at a stock that's, you know, trading around all-time lows, that becomes attractive. Now, you know, all the underlying fundamentals behind it, they need to stack up as well for the stock. But if we just purely look at the chart, what we're seeing recently, it's had that big run up in July, a bit of a sell-off in February, or a quite distinct sell-off. But even to that point, if I can get this trend line going through here, and you know, Pedro and I had this really interesting discussion. I don't want to go off topic. I'll just quickly add, look at the volume that's come in right now in this recent low. That is an important marker in terms of the involvement coming through. That's going to spur big players to get involved as the volume picks up, as you know. But we were speaking about EOS, and I don't want to go off topic, but I will for a little bit. And EOS Optic Systems was a stock we've spoken about for a while. It's now taken off significantly. And Pedro made a very interesting point saying that if all you did, like our students out there that do know these certain patterns that unfold on stocks, if all you did was just follow these patterns correctly, regardless of the scenario unfolding or what was going to happen in the future, you would have had a really good entry and knowing that the stock would have given you a really nice return. And some of our traders out there got in on that type of price action. But what's the most important part to me is the fact that you don't need to know everything about the company.
No, you don't. That's the point. I was looking at the patterns of this earlier last year and saying, I like this one at the moment. And look, it went from under $1 to over $3 or around $3. That's not a bad run. But I think now is a safer place for it, for investors and for more medium to longer term traders.
Yeah.
Short term traders was last year.
Yeah, and it's in a situation where right now the volume is picking up. It is lagging relative to a lot of the other tech players right now that, are absolutely flying. So in terms of value, still there. But I mean, look, if it can get its head above $1.54 or $1.51, this recent high in May 2025, that's going to provide a lot of confidence moving forward in the short term. And okay, I would always argue that if you're looking at this and you can get caught in that trap to think that it was trading at $30 a few years ago, I'm automatically going to put $30 as a target. No.
No, you can't.
No.
Because that would have been way overvalued for what it was then.
Yeah, so let's go with the safe targets. $3 is a nice one. If it can get above $3, then start thinking $5, $6. But I mean, even from $1.50 to $3, that's double your money. So
you've got to be happy with that, don't you?
One to watch, yes.
You'd be seriously needing some psychiatric help if you weren't happy with $150. $1.50 return on that.
And you're probably going to get it quick the way this stock moves.
Absolutely. So what do we got next? Another good one, haven't we?
We do.
I think, isn't it?
Yes, this one's BrainChip Holdings. Another one in the it's in the medical space actually. But again, forming one of these really textbook patterns. I mean, how many times have you been trading for how long, Dale? In the markets?
A long time.
A long time. How many times have you seen these patterns unfold? I mean...
constant.
And they still do time and time again because there's a real dynamic behind why markets move in certain phases. And I'm not going to get into it too much. Our students know a lot about it. But, when they do unfold in these accumulative type moves, expansion is not far away. And so when we go back to that chart, we're in one of those moves again right now. Is today the optimal time to get involved in this stock? Probably not, because it's still caught in a bit of chop between 50 odd cents and 19 cents. But boy, I'll tell you, if it starts breaking through these levels through here and getting above 40 odd cents, then you have to think at some point it's going to move out of this sideways congestion, like back in 15 and 17, start breaking out into trend again. And at or near all-time lows, with volume slowly starting to creep up. Obviously a lot of these stocks need nice news flow as well to come through. That's important.
Well, that's what I was about to say. It's like you see these patterns starting to happen on these stocks like BrainChip and like we saw in Appen, that's where you pick it up. But these ones, this is because they're under $1 at those times. So they're a little bit different than what you see with a big blue chip stock. And I had dinner with at least 3 CEOs of microcap companies last Thursday for a dinner for the microcap conference, which is happening in October this year, which we sponsor. And it's interesting what they're talking about with their companies. And I tell you what, you want to be what they're talking about because there's some really exciting space. 2 of them were in the medical space and 1 was in mining space.
Yeah.
And I'm thinking, I'm not allowed to tell anybody about any of this because it was in private conversation between me and the CEO. And it's like, well, that's insider knowledge, isn't it?
Yeah.
So, but you see how the patterns, and you start to understand why they unfold the way they do. And really, it's more of we need to see that movement up and get that, I won't say the euphoric buying in, but the confidence of the bigger money coming into it. But this one looks great. Appen looks awesome, I think.
Yeah, and I mean, to that point, it leaves footprints. I mean, just looking at this, there is no way a big player would want to get involved if a stock is running at this type of, speculation.
No, they won't.
It's impossible, right? And so these are the footprints that, you often see with these kinds of stocks, and then overlaying, as you said, the markers that are coming, lining that up. That's the big advantage as a retail trader. You get to know when things might happen and see the footprints in price. But this one is showing a lot of accumulation right now, so keep a very close eye on it. But yeah, above 60, 40, 50 cents, it looks very interesting.
It looks awesome, actually, in my bit. Next stock is NextDC, from memory.
Well, this one is AIM, AI
okay.
Media.
I'm out of sequence, am I?
Yeah, a little, but that's all right.
I've been told that. I carve my own path most times anyway.
Yeah.
All right, so AIM.
Yeah, AIM. Interesting. Look, another stock. And I mean, Pedro, if he wants to chime in at any point, he's more than welcome to. But
when I invite him, he'll come.
Yeah, he's probably out sipping pina coladas there in Taiwan, wherever he is.
I don't know. He's having a beer or something. I think that's what he's having.
Yeah.
He told me how to say cheers in Chinese or Mandarin before.
Yeah, well, he was complaining that it was too hot. I said, yeah, mate, that's a good problem to have, right?
Well, it's a good problem to have. It's 3 degrees in Melbourne sometimes. Anyway, so the stock,
yes, AIM. All right. Now, this is one of those scenarios where obviously relatively new company, following IPO, it's had that correction. This is that basing pattern that we talk about. Had a big run. Now it's coming off this big run. So you've seen seller involvement. Sometimes what can happen is this could be it. And it's important to note that this, in certain occasions, if the buying is not, supported by the big end of town, if you will, and these kinds of players, that might be it in terms of the run. So it's interesting now to see what happens with the selling. Clearly we're falling. We're moving into an area where the most significant amount of buying came. So to me, it's very clear. This stock really needs to find some support, if not around here, definitely around that 40-cent mark and start rising again.
It was quite a liquid back in 2023, really started getting better in 2024 when you're taking off. But that also tells you what type of trader that you need to be in terms of what sort of knowledge and experience you need, because all too often we get these emails from people saying, I bought this stock at 3 cents or 5 cents or 10 cents and now it's 2 cents. What do I do? Is it going to go back up again?
Yeah.
Because they're buying the wrong stocks, because they do run really hard. And often you need to understand, I think the important thing you said earlier was the patterns.
Yeah.
Once you understand the patterns, which is stuff we teach our students to do, and a lot of our students picked Appen, and jumped in at a really, really good time. I had a really good run on it. But you need to actually be careful right now. It's going down, obviously.
Yeah, and you've got to respect price regardless of what your views are, because again, a lot of players look at these with the forward mindset thinking, okay, it's going to release news in 6 months or 12 months, but...
I'll ask you a question.
Yeah.
So fundamentals and technicals, is this a fundamental play or is this just a technical play, or is it a combination of both?
I think at this end of town, it's definitely a combination of both. But if you're asking me what drives what, or what is more important in terms of that kind of stuff, I mean, it's no surprise. It's often you'll find price start rising really strongly for only later to find out, the whatever catalyst was there to be announced.
That's what happened with. So part of the reason why I was asking, because when I was telling people about Appen, people kept saying to me, "I'm crazy because look at the fundamentals."
Yeah.
I'm like, no. Look at the patterns, because it was telling me that it was stopping falling, was going to start to go up. So then I don't know what the fundamentals are now. I haven't looked recently for Appen, but technically it looks great right now. But I know when I was talking about it, it was unloved. And the fundamentals were terrible. People were physically telling me on emails and on the YouTube in the comments below, they get these guys on the keyboards thinking they know, and all of a sudden it takes off like a rocket. Like all of those people back in April telling us, you're an idiot because the market's crashing, and we go, no, it's not.
Yeah.
Now telling us, yes, it is, and we go, no, it's not. It still hasn't crashed. It's actually made a new all-time high.
Yeah.
So, end of the day, to me, this is purely a technical play at the moment.
And you've really got to think, if it is speculation from the lower end of town, well, you're going to get these really volatile moves ups and down that you see at the bottom. But if it is something supported by the big end of town, there is no way that the big end of town is waiting for a run to happen for them to only get involved, because they're pushing the majority of the volume. So just that dynamic alone it does not make sense for that to happen. So it's going to be when maybe news isn't great or people are looking the other way that the accumulation will start to happen. So you've got to focus on the price. I mean, you've got to look at the price.
Yeah, absolutely. Can I get Pedro to look at Megaport? Because I think Megaport's the next one, isn't it?
Yes, it is.
I know it's I love this stock at the moment. Pedro, do you want to have a look at this one? Are you there?
Yeah, sure, guys. Sure am. So, I love that last one, AIM Media. That one looks great as well. But this one, Megaport, this one is actually pointing up, unlike the other one. And this is what we always talk about, trading with the trend and focusing on pattern, like you mentioned before. So, monthly chart on the left, weekly chart on the right. It does look like it has been trading within a range for the last, say 7 years, basically, ever since back in 2018, 2019, the range being at around that $6.50, and now it's getting to the top of that range at around that $15. So is it a good time to buy right now? Not sure about that for the moment. It could be a good short-term trade. It does come down to the time frame of your trade. Whether you're looking at this long-term, medium-term, or short-term, like I mentioned earlier. So once we ascertain this, I can just go quickly to the weekly chart and have a look. And really, we talk about patterns time and time again, and this is a classic textbook. And I'm sure our traders would have had a beautiful go at this one, because it's just so repeatable, isn't it? You have these beautiful consolidation patterns before these runs. And I can see a few exit triggers up here around 2024, which would have got you out of the trade. You can even just put a nice little momentum line, up there, and even, one to get you back in. There's multiple rules that you could be applying this stock to be trading and getting money out of it short to medium term.
So are you expecting like obviously it's down this week and we're only into Tuesday at the moment, so we don't have much data for this week. Obviously, we're thinking the market's got to come back for a few weeks, which we've been saying for a couple of weeks. Are you expecting 1 or 2 weeks down or 3 or 4 weeks down, or how far are you expecting it to come back?
I would say possibly for the next couple of weeks. Of course, this is going to be one of those ones that will follow the market as well on the way down. But if we go back to the weekly chart, I can outline possibly the next level where it might find some support, and that's going to be around that $11 mark. We can see that multiple times in October 2023, around August 24, more recently in February. This is a very important level for this stock. So this is a weekly chart. If we think that it's going to come down for the next couple of weeks, that $12 level is looking beautiful for the next level of support.
Perfect. Great time for people just to set their strategy up and get ready to get into a stock like this if it does find support anyway. Now, we've got one more stock before we move on to something else.
Yes, we do. Yep. Last one is AYA. So this is, a stock that is trading around 60 cents. They got up to $1, got rejected. A little more illiquid than some of the others we've looked at before, but hey, nonetheless, it is a stock
it's
that...
looking like it's coming back to momentum though.
Yeah, and that's why it's in this list. It's quite interesting. It's had this nice blow-off expansion. What you often see, if this expansion is, sentiment or speculation, it's going to come back just as quickly. But we've had, since the move in October 2004, 1, 2, 3, 4, 5 months, and it's held basically the lows of December where that really strong buying happened. So I'm starting to think the longer it holds above these December lows, that this is some serious bullish intent with this stock. Even as the volume picks up, you can see the volume actually falling off as the price is falling. So right now it's, given it is in trend, it doesn't want to go lower, which is, not that typical for stocks if they are, as I said, in those momentum phases. And it's very early. Stock's only been around for a couple of years. So I would be watching this level very closely. Any breaks back above this momentum line, it looks to me like another resumption of that uptrend. And for a safe, target right now, given it's failed at these highs at around $1, I will be watching the $1 level very closely.
I like looking at these stocks while Janine's not around because she doesn't like anything under $1. So
no.
I think it's great that we're looking at that with you and Pedro. So, but anyway, we've got some more of that later on anyway. But as mentioned earlier, later on we're going to dive into some more AI stocks that look like they're ready to skyrocket. But now it's time to talk all things market trending for this week. I want to hand it back to you, Pedro.
All right, well, it's a big day for Virgin Australia as it makes its long-awaited return to the ASX today under the ticker code VGN. Listing at $2.90 per share and valuing the company at $2.32 billion, this IPO has been one of the most anticipated market events of 2025. But the big question is, should you jump on board or is history about to repeat itself for Virgin Australia?
Mate, look, I'm voting no, but I don't know, Phil may have a separate thing. I didn't buy it the first time. I didn't even buy Qantas the first time. I just don't buy airlines and it's, yeah.
Look, it's IPOs, getting into IPOs itself, it's a risky game, so.
The only IPO I ever bought was Telstra One. That was it. I've never bought another IPO. And some people might think that's crazy, but I don't really like IPOs, but more I don't like airlines.
Yeah.
Because anything can happen with an airline. So I've never bought an airline in my life and I'd never intend to, but hey, well, historically IPOs haven't always offered the best risk-reward ratio, and Virgin's own track record isn't exactly encouraging either. When it first listed in December 2003 at $2.06, the stock dropped 40% within 2 years. Even during brief recoveries, the red flags were clear for those who knew how to read a chart. Now, ultimately, Virgin was delisted in 2020 after its value collapsed during the pandemic. Now, to me, I'm going to get your thoughts on this, Phil, because I know my thoughts. I've done lots of research multiple times on IPOs. Janine's done extensive research independent of me on IPOs. And part of the reason why I don't like them, I constantly found that at least in that first year you could buy them cheaper, 50% of the time, a lot cheaper, than what the listing price was as soon as it hit the market. So what's your thoughts on it?
Look, my experience is actually going off what you said, really. I haven't done the research that Dale has done, but just going off that comment alone, I can, with a high degree of certainty say that most of the IPOs I've seen follow in that manner, and we show it time and time again on this show. 12 months later, initial euphoric spike, the initial buying sets in, bang, drops back down below the IPO listing price, and then it starts to, if there is real buying sentiment, you'll see those classical patterns unfold on that stock, for then the real wave to come in terms of the buying. So for me, getting involved in an IPO, I think there are over 2,000 stocks on the ASX. Why?
Well, maybe I'll talk a little bit about that in when we get a few more minutes about the IPOs, because it is really important to understand what's actually happening when the stock IPOs. But anyway, how about we take a quick look at the chart of Virgin before it was delisted. So do you want to bring that one up, Pedro?
Yeah, sure. So we've got the chart here of Virgin. The ticker code was VAH before. And this is a point that I wanted to highlight, that we've got the hindsight here and the value of having a chart to analyze. When you have an IPO, you don't have that. You don't have that historical data to analyze. So you're really running blind. You're more speculating rather than actual analyzing and using clear rules. Now we can see that from the initial listing data in around 2003, like we mentioned, it dropped 40%. Then we did have a spike up to that high in 2007, but all stocks did basically. That was the the GFC high, as we call it, and then ultimately it collapsed and it never recovered again. So it traded within that range of around that 50 cents to roughly around that 27 cents, say. And then it was, once it fell out of that range, it wasn't able to recover. Now, I quickly wanted to point the viewer's attention to something that I've got here. I've taken Virgin back to its first listing date.
Okay.
Right? This was when it first came out, the first day. Would you rather invest or trade a stock that looks like this, or a stock that looks like this, that at least you've got some type of data? And that's the point that I'm trying to drive home here. You've got this at the moment with the current listing, and that's what you're going to see after today, after it has been traded in the market. But really, what type of analysis can you apply on that?
Well, that was my point just a minute ago when I said, well, let's expand on a little bit more, is when you see a float coming up, the brokers are contracted to get this float out and get it fully subscribed. That's what they get paid to do. So the documents that you get, the PDF or PDS that you get, is all a marketing document written by the marketing team to get you to get excited about a stock, to put more money into it so that you buy it on the float. And so it's not necessarily a stock that you can see history on. Now, obviously Virgin's been trading all of that time that hasn't been listed, so it does have a trading history, and it is a company that sometimes makes money, I'm assuming, otherwise it wouldn't still be here. But you don't know until you get two people exchanging cash for something in an open market. You never understand the actual true value of a stock. Whilst you're getting this prospectus that you can fill out and put your money into a broker and you can believe the story that they have, at the end of the day, if it's not supported by the big end of town, all you've got is a nice piece of paper and a nice story, and that's about it. But anyway, time now to get back into our topic for the night and reveal some more AI stocks with huge potential. I'm going to throw it back to you, Phil.
Yes, all right. So the next one is NextDC. Now, one that is known.
You skipped it in the order, didn't you?
Yeah, I've thrown it in there. Well, this is the hardware side of AI now that we're infrastructure side that we're dealing with. Obviously, NextDC is the data center player, and right now, what's quite interesting about NextDC, I'll just keep it on the monthly chart because it did experience, since listing, the most significant correction that it's had in history, and that went down about 49%. Now, we look at this chart pre-July 2024, beautiful, strong chart NextDC. And so to me, the question was out, after its strongest pullback in history, what was it going to do?
Yeah.
And what it's done is really answered a few questions, because you go and look at just one of these momentum lines that we can apply through this period through here, supported it almost damn near exactly found a reversal, and buying has continued on.
Well, you had all that, can I say, with the COVID correction, but then you had all this talk around everybody's working from home, we need more data centres, blah, blah, blah. Obviously AI, ChatGPT coming out a couple of years ago, more data centres. So you had all that euphoria, so it took off to that big high. So that, in theory, it didn't look overextended, but when was it going to come back?
Yeah.
And so that's what we've recently seen. But we know AI is not going anywhere soon, and I know net zero is impossible the more AI grows because of the power that's required to power all these data centres because they are huge. I mean, I've been to Next DC here in Melbourne. I've been in there. There's like racks of computers that goes for miles, and only 100 metres down the road there's another data centre that's bigger.
Yeah.
That's just in one little street in Melbourne, and there's truckloads more of them here in Melbourne, and obviously Sydney, Brisbane, Perth.
All over.
And they're building more and more and more. So I like this story.
Yeah, and and we're not talking about small companies. We're talking about massive US players like Microsoft building data centers in Australia. And I mean,
Amazon's just committed to more.
Yes. Yep. And the price action now is giving that kind of scenario, because the way buyers have picked it up in this recent bounce, if we go from April 2025, within the nature of 2 weeks, if you will, that reversal has been almost 50%. Now, you go back throughout history and look at the nature of, or the strength of the reversals coming out of significant lows, you won't see a reversal that strong. So whilst I think it's great news that the buyers have come back in, and this is definitely one to watch, because if it holds that buying momentum, it does have very real potential to take out the all-time high. The buy and seller relationship right now, I'm just a little bit cautious.
Yeah, I'm with you.
Yeah.
Now, we got one of my favourite stocks coming up in a minute, but before that, I'm going to go back to Pedro to show us the next stock. So are you there, matey?
All right, so I believe that the next stock is OPL. Now, I'm not sure what these guys do, but my goodness, does it look illiquid? I'm going to start with the weekly chart here. We do see more volume coming into it, but I mean, gosh, I don't know if this is a stock that people should be really looking into. I think that you'd need to have a look at the story behind this one, and then maybe wait until it becomes a little bit more liquid before looking to get into
Well, it's a digital health company, mate. It's in the AI space for digital health. So that's a really big thing coming. And one of the companies that I had dinner with the other night are in digital health, and it's a very, very exciting space, because nowadays you can live anywhere in the world and be talking to a doctor or getting analysis anywhere else in the world, and AI is just going to accelerate that. But you are right. Do you got any more to talk about on the chart?
Yeah, I would say, I mean, that's a great point. If you know that they are in the healthcare space and we are looking for a healthcare bullish run down the road, especially as it integrates with AI. So knowing the backstory, and this is what I was talking about, will provide further weight to investing possibly in this stock. But from a trader's perspective, this one is just a watch for me, and just a little bit of a further away watch.
Yeah, and you need to know what you're talking about. I think that's really important, because it is a liquid, but eventually you'll see the more volume coming in, which you showed, and when the more volume that comes in, the more smoother it is and the easier it's going to be to trade. Now, if you do want to trade and learn about the market, and I got an email only the other day, and somebody said, a lady, she said, I'm making so much money out of reading this, haven't read this book. It's not funny. And she said, and I mean a lot of money. That's from reading the book. And the book's for free, guys. All you got to do is pay the shipping, go to our website, wealthwithin.com.au, go into the store. You can pick up this book, which is my first book, How to Beat the Managed Funds by 20%, and learn how to make a lot of money from your trading anyway. Let's get back to the stocks. You got another one, Phil?
All right, I do. Then this one is called Unith Limited. Now, another one that is, I mean, trading at, under a cent. Now, it is quite a liquid, Dale. It is in a space that is very promising.
So I'm glad Janine's not here.
Yes, and the reason this one's in the list, obviously, right now it is way too early to be thinking about these stocks, but I wanted to make a point, even on the previous one.
They become big companies after all, some of these, or they get taken over.
Absolutely. I mean, Fortescue started...
Well, I was only talking about at the dinner on the other... I'm sorry, but keep bringing up this dinner that I had the other night, but we were only chatting about Vocus when I first saw them speak at the Microcap conference like 10 years or more, and now Vocus is one of the biggest telcos in Australia.
Yeah.
Huge.
Yeah.
They've just taken on the internet part of TPG, supported all that. So that it's huge. There are lots of other companies that I saw at the Microcap conference that look like these stocks.
Yep, and I would
back and wait.
I would say in certain sectors, if you're looking at a stock like this, say for example utilities or a bank, okay, throw it away.
Throw it away, yeah.
But you're talking in a space that
Growth space.
And has the ability to disrupt, complete markets.
I've even seen AI versions of me talking on this thing.
Yeah, that was an interesting one.
Not my words, but somebody actually made an AI thing of me talking on here, promoting something else. So be careful of what you're listening to.
I mean, it's crazy. Even in the previous one, the health space, right now, the AI is picking up illnesses in people way more accurately and way faster than the human eye can. So the advancements are going to be huge, and the disruption. That's why in certain sectors like the biotechs, like AI right now, I don't have an issue looking at these kinds of stocks, but if we just go back to that chart right now, yes, it is absolutely way too early. What would be the first thing to look for? A major pickup in volume. That would be the first thing. Let the stock tell you that there is buying involvement. Don't try to pick the low.
Don't jump early.
Yeah, don't jump early. And to that point, I really want to see it get above, at least 2.5 cents here and start to give, if I apply it with the trend arrow, this type of price action where prices are moving up. Right now we're not seeing any of that at all, but it's not something to throw away. Keep on your watch list because it's in a really hot space.
Yep.
Just wait for price to confirm it.
All right, well, let's go to a big stock and we'll throw back to Pedro for a bigger stock. It'll make you happy, mate. It's not a few cents, this stock, I know. So take it away. I think it's WiseTech, isn't it?
It is, and it definitely makes up for the last one. So thanks for that. We'll get onto the chart. I mean, I really like WiseTech. WiseTech is basically the technology sector in our market. It is the biggest technology stock that we have, and right now it has fallen back into that trend. If I just apply this momentum here where it's been currently kind of, bouncing off and trailing around, it always seems to come back to that angle. So right now we're above it. We did have that dip back in April, but it does look like it's now traveling back up and it's going to challenge that all-time high. Now, I saw a report, interestingly, from Morningstar that they've assigned this a wide moat. Now, for people that don't know what a moat is, imagine a castle with the water around it, stopping people from getting in, and they assign these moats to companies which they think are basically hard to break into and for competitors to really compete against. And now they've assigned a wide moat, meaning that this is a very challenging market to break into for other companies. So that. And the fact that the CEO has stepped back and all those, issues around what was going on with him, they're starting to go away. And I mean, align that with the technicals, the fact that it is above this high of around that 101, it's broken above it. It's got that gap to fill. I think all the signs are looking great for this one, and it's doing a nice little setup here. I'm sure that our students will be looking at this very closely and just waiting for that confirmation. Instead of trading on speculation. And once you do get that confirmation, this one will fly.
I do. I absolutely agree with you. I know a few students have been chatting to me about this stock and having it on their watch list. Now, if you want to be a student of Wealth Within and do our diploma of share trading and investment, there has never been a better time for you to get on board. We actually only about 2 days ago launched a start of the new financial year, 2025-2026 financial year special offer, and it's a rip snorter. I think it's like $9,000 worth of extra value that we've thrown in onto the course. If you just check out the link in the description to this video, you'll be able to check out this special offer. So if you want to learn how to trade the market the right way and do just as well as all of our students, check out that link in the bottom of this video. But all right, well, if you want the skills to analyze stocks you've just seen tonight, then visit our website, as I mentioned, get that special offer. So wealthwithin.com.au. Now, moving on shortly, we have an amazing hot stock tip this week, and it's coming from Pedro as normal. But first, let's answer some of your questions. Now, Christina writes, what do you think about the current trend of Insignia Financial? I bought some in early December at $3.14. Do you think its medium to long-term uptrend is still intact? She goes on to say, I'm a bit worried about the anticipated impact of the potential new capital gains tax on US investments. What do you think, Phil?
Okay, Insignia Financial. Now, this one had some really nice news coming out. Surprise, surprise, right near these all-time lows in the past. But if
how often have you seen that?
Yeah, never, but quite a bit. But yeah, look, to have a look at Insignia, regardless of that, we saw really nice uptick price support in September. It's given this expansion. Now, is it? If you're looking, did she say medium to long term or?
Yeah.
Yeah, she did. Okay. Well, there's nothing right now on the big picture looking on the monthly chart that, you know, the stock is in capitulation or anything, because you've just got to measure what happened to the left-hand side, this up move here. It's only clawed back about half of that. So the thing is, there is a very real possibility that the stock could come all the way back down to around 280, 270. And I think the reason she's asking the question is because she's bought at $3 and that would put her stock into negative territory.
Correct.
And so now this is that conundrum in terms of, you know, really, are you going to stick to that idea that you are a long-term holder of Insignia, or are you going to change to becoming a short to medium-term investor?
Look, it's to where you're, I mean, some people think medium to long term, I don't need to worry about an exit strategy, but you do.
Of course, yeah.
Because obviously there's a huge movement off that top.
Yeah.
That there would have been, I can't see the chart, but I reckon there's probably 2 or 3 signals to sell that stock before it got down to where it is today.
Absolutely, yeah. That is the case. And right now, I mean, it's about 30% off that level. If it were to break the low of May 2025, that would signal that the stock wants to go lower and probably give another exit signal. So
she's also talked about the potential of capital gains tax, US capital gains tax. I'm not sure. I haven't heard that, so I can't comment. So have you heard anything about it, Pedro, at all?
I have actually. So I was following this stock about a year ago, and they had a takeover bid.
Oh, yep.
So that's why the price jumped. Now that takeover bid is under scrutiny and possibly not going through. That's why the price has been trending down. So, I mean, she got in at $3. I'm not sure if that was before or after the takeover bid. That's why I don't really like it. If you're holding a stock around these takeover bids, I would prefer to either take some money off the table or take all of it off the table, because really you don't know what's going to happen.
Yeah.
We're seeing the same thing with Santos at the moment, just stagnating.
Yeah, well, Christina, then you just need to have that line in the stand, because it's possible it's going to keep falling away. Obviously, if it doesn't follow that up, but just make sure you've got that line in the sand of where you're going to exit the stock. So hopefully the boys have helped you out with answering your question. Next is Sai, who writes, I've been following your videos for quite some time now, and they are informative. Thanks for educating us. Could you please share your thoughts on REE? We purchased this stock at 2.9 cents and now it's trading at 2 cents. Do you expect any spike on this stock in the near future? Sounds like one of those stocks you probably shouldn't have been in, Phil.
Yeah, let's go and have a look at that chart. Look, unfortunately, you know, a stock at 1 or 2 cents, and he's used the correct word in terms of spike. Do you expect a spike? Well, that's anyone's guess. It's driven, you know, it'll be event catalyst driven, if that. But, you know, you've also got to keep in mind that the high volume that came through on the 28th of March, about 100 or 200 million dollars worth of volume coming through. That doesn't always necessarily mean, because I know when people look at these stocks at bottoms, they'll look at the volume come through and they'll say, oh, that automatically means that someone big has bought. But it could also mean the contrary. It could just mean, you know, big positions being offloaded. They've lost confidence in the stock and they've said, nope, that's it, offload it, it's done.
I look for they've bought it. I just think they've been, I won't say victim, but it could have been they just saw it on a chat forum or something like that. Because where they've bought it is quite often a common thing. The stock's already taken off. Yeah. Volumes come in, people start chatting about it. This is up 50%, 100%, 200%, 500%. And they go, oh, I'll get on this stock. It's only a couple of cents. And they get it just before the peak and now it's falling away. Yeah. So not a stock you should be trading, Si, unless you've got the good knowledge. Maybe you should buy my book. Remember, it's free. You just got to pay the shipping. And sorry, guys, I know last week people complained. Well, no, they said it was great because 17 minutes into the show before we promoted the book. But that's your price for watching the free show. Anyway, but so have a read of the book and it'll help you with your trading anyway. Now, Romney writes, I am caught in a crossfire between fundamentals and technicals on Kogan. Technicals aren't favourable for a buy yet, rather trigger to sell this week. However, it has a juicy EPS growth forecast of 18% in 2025 and 60% in 2026. This is making my buy decision hard. I'm most relying on the technicals as fundamentals are a lagging indicator. However, this EPS growth is, or in this case, is unbelievably high. Which would you choose here? And I'm going to throw straight to Pedro first to get your thoughts on this, mate, and then we'll get Phil's thoughts.
Yeah, sure. Well, I'll go the technicals any day. I mean, fundamentals are great, good for filtering stocks and so on, and having a look under the hood, as I like to call it. But I mean, these technicals, I had a quick look at the chart, and let's actually have a look at the weekly chart. Have a look at what's happening here with this latest close. It's pointing down, and it's actually traded below this critical level here. So regardless of what the forward EPS is saying, right now, it might be, yes, that this company is primed to grow earnings, but like we always say, the fundamentals will tell you what to buy and the technicals will tell you when to buy. And at the moment, this is not telling me to buy. It could actually trade back down to these sort of levels here, around that $3.50. I mean, it could actually be, at a turning point soon, but just not yet. And just finally, I'd just like to outline what happened here with price, how price got bought up, sold off, bought up heavily to that high of March 2024, sold off, bought up again, but it actually failed to really rally above this recent high, that previous high of 2023. So that is also another bearish signal for me. But hey, it is coming down to some interesting levels. So, I mean, keep an eye on it.
Yeah, I'm with you, mate. I really am. Any thoughts, Phil?
Just on that EPS, I mean, what makes you think that is a good EPS? Because EPS always has to be in context. Kogan might be in a sector where that EPS is not great. It might be revised, in the next or forward quarter to something lower. I always find that interesting. Just because a stock may have a certain number EPS and you blankly measure it to what you think is good, the market might not always take it that way. So just keep that in mind. It might be sector specific, and so it's, a bit more.
Yeah, I mean, Janine and I did a lot of research on, do you do fundamental, technical, combination of both? And it's sort of like, if it's fundamentally good and technically good, we found the stock went in the direction much stronger.
Yeah.
If it was technically good and fundamentally not good, it still went in the up direction, but not as strong. If it was technically bad and fundamentally good, it still kept going down until eventually it turned technically good, and then they were both good.
Yep.
And then it went up. And if it was technically bad and fundamentally bad, it really tanked.
Yeah.
But I never take a buy or sell signal unless it's a technical point, because as Pedro said, technicals tell us when. Fundamentals tell us what. Now let's move on to Christina's email, and she says, I'm a medium to long-term investor and I bought S32 in November last year at $3.80. My strategy is to follow the long-term cycle in the commodity sector and exit in a couple of years. So I've been holding the stock despite the volatility. I want to ask, is the trend during this time frame still holding? The recent seesaw around $3 seems to confirm the bottom or indicate sideways trading for quite some time. Now, I'm going to go to you on this one, Phil.
Yeah.
Has been a big stock that we've been frustrated with, I think.
Look, it's had a lot of news catalysts come out that, not so great. But even that said, you go and look at that chart, and I commend her on thinking this way, because when you have a look at that, the specifics of that chart, it is really not falling too much below the February 24 low. It tested it in August. And even though it broke through in April 2025, it's basically bounced back above that level. Apply a horizontal line. So well done on picking up that it's not serious in terms of, the blow through of that level. It's still holding above, as you can see right now, really clawing its way back above. What I would say is, in terms of this particular stock, it's coming off a real I mean, a really, really healthy correction in this particular sector. When you see stocks,
Well, it's down 50% on what it used to be.
you know, and we've done a lot of study on this. When these mining stocks come down 50, 60, 70%, and they're still good companies, that's often the time where they do find that base. And I mean, if we just apply one more line on through here, the very famous trendline, Dale, or momentum line as it's starting to get termed right now, you know, you could have applied this momentum line back in February 2020. And what do you know? In April 2025, it hits it exactly and bounces. So to me, that is really the line in the sand right now for S32.
But I mean, she's picking some good stocks. Like, this is a good stock. You just need some rules, Christina, because medium to long term doesn't mean you need to ignore that if a stock's going down, you need to get out of that stock, because it allows you to minimise the risk to your portfolio, because this stock could keep going down. It theoretically could. And we don't control the stock. We only control when we buy and when we sell. And by not having an exit strategy in place, what you're doing is you're putting your portfolio at higher risk. So understanding when to buy and when to sell is really critical. So just because you've got a medium to long-term buy doesn't mean it'll fix everything, because this stock could go sideways for many, many, many months. And would you rather be in a stock going up or down? And I think I know the answer to that. So check out my book, or you may even want to take up that special offer for our course, because it'll give you some great rules to make sure you know when to get out. Because a lot of people buy stocks well, actually most people, everybody knows how to buy a stock, and it's really easy. You just buy the stock and you can get into it. But the biggest challenge we find people have is exiting, and exiting at the right time. That's what we're going to teach you if you do the course. But, to me, you really do need to have that exit strategy. Now, we'll move on to the next one. Now, King is writing about, he says, I have a question about whether it's acceptable to change an exit rule if the price action has potentially changed in nature. He goes, I purchased Genesis Plus with the stock ticker code of GNP back in February, and it ended bouncing around but didn't trigger my initial stop loss. My trading plan was to have an exit underneath a trend line, but that exit would be sitting at about a 25% down move from the current price. So, is it an option to now reevaluate and exit, or would you just wait for an accelerated trend line to become valid? Now, I love that question, because it's like, it's got context, but then you answered in context to the chart. But I'm going to throw to you, I'm not going to give you my answer.
Yeah, it's a great question. And, part of it stems from the fact that you want to lock in a profit as well. So there's psychology behind this, King, as well. So let's just go to that chart to have a look for you, because yes, if you were to wait for the stock to continue on how it was traveling in terms of momentum, then he's right to the fact that it's basically back to his buy price, giving up all of that profit right now, and it has accelerated away. That is an interesting point. But how do I word this?
Well, I mean, it's how often do we get somebody that a stock that's gone exponentially up, and there's no necessary technical points for them to exit, and they go, oh, what do I do if it comes down? What rule do I use? That's what he's struggling with at the moment, isn't it?
And I mean, I would say one thing you could do is just lower a time frame, go on a shorter time frame and have a look. Follow price action a lot closer. But I'll give you both sides of what could happen is, you sell right now because the stock is accelerating away, and you take your profit, or you get an entry on a shorter time frame. And then, you pat yourself on the back, you say, great, a month later, this stock is worth $6. Now, that affects your psychology in probably worse ways than it does, when you don't take a loss, right? And so you're falling in that trap of going against what you initially set out to do. And you don't want to get into that too much, but I love the fact that you've identified the momentum has shifted. It is very parabolic right now. So I agree with your theory on looking for an exit would not be the worst thing to do. Just accept the fact that if you do get out, it's done. Forget about it, move on.
Because I've done all of what he's talking about. I've had stocks where they've gone parabolic, and I'm just going to wait for the trend line. I've got out right near the top, done perfectly. Other ones I've actually shortened my time frame, taken other exits. But this is really where, I think King is one of our students or former graduates. This is where you work with the team on our mentors within the team to help you with understanding and taking you through some of those scenarios and strategies and talking through it. Because once you talk to somebody like Phil or Pedro, and you start talking about what their experience is you start to formulate your art of trading. Because art of trading is not just guessing, it's about having a solid strategy, but also looking at price action today and in context with what it's been doing since you've bought the stock, and then making a change to your rules, but not just blanket doing it. And I know what Janine would have said if she was sitting here. She'd just go, King, just sell 50%. Keep the other 50% if it keeps going up. If it goes down, you get out. That way you're protecting the profit on 50% of it. But anyway, I've got to go back to Pedro because now's the time for our hot stock tip for the week. Take it away, mate.
All right, so this week, this is an exciting one. Collins Food Limited, so that's ticker code CKF. Now, they've just come out with a report today that their revenue is up a whopping 2.1%, which it doesn't sound like much. It's a record 1.5 million. So this is a record for the company. And the stock is up in the manner of 20%. So this is from yesterday's data that I'm displaying now. So the stock is currently trading at around that $8.70. So it is up around that 20% on this news. But I suspect it's more to do with this. They've got a fully franked final dividend of 15 cents per ordinary share. So it could be a little bit of those, dividend investors. But there's another layer to this. And this is the exciting part about being a technical analyst. This $7.15 level that I've marked here will be known to our students. And I'm sorry, I'm not going to let out what exactly this level is. But basically, if you know what this level is, you can make most of your money just by knowing that. And I'll put my my hand out on the line to say that this is such an important level to mark on your chart. And just by knowing this, I mean, you could make the money back for the course just with this skill alone. But anyway, I mean, right now it's at $8.70. It has bounced beautifully. The next level to watch out for is this $10.40, which represents now from that current level, another 20%. So is it too late to get in? Well, let's have a look at the weekly chart to ascertain that. So I've got this kind of momentum line here. It's not a proper trend line at the moment. We have seen price now trading at around that $8.70. So it has broken above it. Well, you might want to see what it does at these current levels. I can see another kind of resistance around there. $8.90. You can see that it has found support and resistance multiple times around that level. So you might want to see what happens around there first. It might actually come back and retest this downtrend line. But if it then does break above that $8.90, I think that this represents a nice, beautiful little maybe short to medium term trend up to that trade, I should say, to that $10.50. And if you even wanted to stay with it, if it has a nice little trend behind it, you may want to stay with it until that $12.60 mark, which is another 20%. So, I mean, this stock, I think it's on the uptrend. It's the early days. Now's the time to be looking at it. It's looking very nice. So, that's basically my hot stock for today.
Mate, I think your hot stocks have been on fire. I've seen some emails in the last week with people saying to us, we have made so much money out of your hot stock tips, it's not funny. And more than one. So they're loving your hot stock tips. They're also loving, obviously, the Monday recording we do, but it is really interesting. We're giving you this for free on YouTube. So imagine what you could achieve if you actually understood how to trade the market and had done our diploma course. So remember to check out the link in the description to get into our start of the new financial year super special offer for those of you who want to learn through our diploma of share trading and investment. Now, if you want more from us, check out our video, biggest ASX oil and energy stocks in 10 years, just arrived.